Good morning, one and all, and welcome to this morning's video. I hope that you had a great weekend, and welcome to, as I say, this morning's video. I have three pairs on watch. Those are Euro dollar, pound Aussie, and dollar CAD. Just to say that I am out of my Kiwi yen trade now for, I believe it was 2.63% or 2.63x, I should say, because I'm actually risking 0.5% per trade on my funded account at the minute. But we've got a lot to break down today, so I'm going to just get on with this and tell you first of all why I was looking at this trade and how I managed it, etc. So Kiwi yen on the higher time frames, we had this high here, we had the near miss to the high, implying that we would likely gravitate back towards it. We had the more corrective middle section, which was the clue. We eventually break the high. Okay, as you can see, if I just zoom to the left slightly, we break the high, move to the downside, and then I was seeing this as an impulse correction continuation to push lower, especially when we had the gap to this low. And if you wanted to include this volatility wick as part of all of this, then you also had the gap to this low here where there was a lot of volume. Okay, so if we just delete all of this, okay, if we just zoom into the more relevant piece of the puzzle, we also had, so we had all of this volume. Okay, we had this high here. We tapped into it by way of a reversal structure. Okay, we broke out of all of this consolidation, and then price left a bit of a footprint here after breaking out all of that. And then once again, we got there by way of a reversal structure. And we had, just before I got short, we had this, I don't know why I look like something out of a horror movie. I don't know why my face is lit up like it is. I just restarted my computer and it didn't look like that beforehand, but now it does for some reason. I've had some funny things going on with my computer this morning. Anyway, we had this rejection here and we wicked through the area and not to it. Okay, so that was a tick in the box. Yes, it was bullish, but look at the body of the candle. It's not particularly bullish. This is a washout candle. We tapped into the area, pushed to the downside, confirming this reversal structure as much as anything can be confirmed in trading. Okay, so we had what I did like is we had 4-hour momentum. Look at this 4-hour rejection candle there, no wick below it, and then we follow through as well, and there's very little wick below this candle as well. Okay, so now I'm on the 1 hour, and if you watch my previous videos, you'll already know about the entry. So there's a little bit to unpack here. So we had I got short after this 1 hour candle here. I set my entry just below. I had my stop loss there. This is to scale the exact prices that I got in, stop loss, etc. So then we broke this structure. I'm not locking in. I'm not moving to break even yet because I'm waiting for this structure to be broken. Here, once this candle closed, this red candle here, I moved my stop loss to break even. I always like to add on a few pips because I find that when you do get taken out for breaking, you often incur a small loss, be that financing fees or you get slipped ever so slightly. So I like to add on a pip or two because over the course of a large sample size of trades, that tends to offset when you set it at break even and you get slipped ever so slightly, or as I said, the financing fees, etc. Anyway, we're down here now, and then once we got to here, let's just zoom in. Once we got to here, you'll notice the stop loss back here. When it got close to swap hours, price was around here, so I moved my stop loss back to where it originally was, just for swap hours, just because Kiwi yen, the spreads tend to get quite high. Once they were over, I put my stop loss back where it originally was. Okay, and then we moved to the downside here. Now, once we broke, where was it? Here. Okay, so once this candle closed, this bearish candle closed, I locked in here, which was 1.87x. I'm saying X just because I risked 0.5% per trade, not actually the full 1%, and keeping what I was taught to do. Now, one of the things I'm always thinking about not leaving too much profit on the table. I'm not scared of giving money back to the market, but I'm also trying to trade in a way that I would if I was trading the £1 million account. So once we closed, where was it? So yeah, we were here. I locked in there. And once this candle closed, I believe it was this one, I locked in here. Okay. Now, granted that the start of this correction was here. Okay. was here, but I was looking at things like this. If you analyze this on the 15-minute, so if you analyze, we have the base of all of this structure here. And what I was seeing as price didn't need to necessarily come back to this high, because this was kind of the retest of the base of all of this structure. And if you look, we also have that high there. So we've got this kind of zone. So I was seeing this as a way that I could potentially lock in above here and, capitalize on a little bit more profit without price needing to come back to here, because this was essentially the retest of the back end of that. Knowing full well, though, that in these instances, price will often gravitate towards, as I said, the start of all of this, which is here, especially when we have the thing to note, this is more prevalent on more time frames than this is, because this was prevalent on the 1 hour chart and this was prevalent on the 15-minute chart. So just something to note there, where I could have actually, left my stop loss there. But the other thing to note is that when we were around here, so when we were in this area, okay, I got tagged out here for, what's going on here? I got tagged out here for I think it was 2.63 or 2.63x, because I'm risking 0.5% per trade. When price was around here, okay, if I had moved my stop loss or left my stop loss here or moved it back to here, that would have only given me about this, it would have been about 8 pips. So I probably would have been tagged out by the spread during swap hours anyway, which would have then meant that I would have had to move it back still further, perhaps up here. And by this point, you've then left, what's that? We've got 1.0. So you've got to remember that at one point it was running at 4.7, and I would have had to moved it back to somewhere in the region of 1%. And when you start doing stuff like that, then you're potentially leaving a lot of profit. Are you going to be happy if you get taken out for 1% when you're running at 4.7? Okay, so that's one of the things I'm asking myself. The other thing is that we pull back. If you just look at this in the 4 hour, once we had this momentum here, so that this 4 hour candle closed like this at 6 o'clock, okay, 6 p.m. So when I see that, I'm also anticipating much deeper pullback, potentially something which pulls back, gives us some kind of M style, which pulls back into there and then drops. Okay. And I don't want to leave that kind of profit on the table, or we're going to get something like that. Okay. When you see those bullish 4 hour candles, that would imply that we're going to get something larger. Okay. And I don't really want to sit through a correction that long, especially as that would have taken us into Friday, if you look at it, and late Friday. And I don't really want to be, holding trades or holding that kind of stuff, that kind of correction late into Friday. And I don't hold trades on a Friday either on a pair like Kiwi Yen, okay, because the spreads tend to get quite high. So I'm factoring in all these things. So I got tagged out there, and then of course price dropped. It would have hit my take profit, which was there for around 5.95%. But I'm not bothered about that. What the amateurs are doing is they're infatuating over, what they could have made or what coulda, woulda, shoulda, etc. That will happen in the majority of your trades at some point, but you'll also stay in by a pip or two in many instances as well. So I'm not bothered about that. All I'm interested in, because I'm trading a funded assessment account, all I'm interested in is stacking these small wins and just keep doing that repeatedly. Okay, there will come a time when the take profit will be hit on one of my trades, but not on this one. But anyway, that's just something to note. And I did actually factor in the fact that this low was more prevalent on more time frames than this was, and that's just something to note in future. But it's about confidence, not one swallow doesn't make a summer, as it were. So that is Kiwi Yen. I'm going to speed up a bit. I just wanted to go into a bit of detail there. So euro dollar, I'm looking to get long on this. Why? Because we have this consolidation here. Okay, we have all of this consolidation here. Once we broke out of that, price left a footprint, okay? And this is the origin of all of this move here, okay? So it has, although it doesn't stand out a great deal, it's significant. It is the start of this consolidation here, okay? And, we got quite a big move from there. So this, to me, at this moment in time, could be a reversal structure, because we have this element to it, okay? We have this element here where we have the low, we have this, which breaks below here. But as I said previously in a previous video, we only wicked to the area not through it. So there was always a reason for price to come back down. So this could be a reversal structure. And the other clue is that we have a near miss here to this high here. Okay. And potentially we could be going a lot higher than that. We don't know. So what I'm going to be looking for today, because we've kind of tapped into that area now, and because it is significant, okay, in terms of this, and it is a higher time frame liquidity point, what I'm going to be looking for is, you can see here where potentially, and notice we've got gaps here as well. So we have a gap, this high narrowly missed this, which narrowly missed this. This failed to retest the back end of that, and actually failed to retest the back end of that. So there's lots of reasons why price might move to the upside. And even here, if you just look at this kind of, yes, it's a double top, but usually double tops respond from an area of value. This kind of responded from itself. And even then, this narrowly missed here. And we have the near miss there, as I mentioned. So what I'm going to be looking for in this instance, and I do have to speed up just because I went on a bit longer than anticipated on Kiwi yen. I'm specifically looking for a break, a proper break below a washout, and then a break back in, and then something like this. So a 5 or a 15-minute continuation. I want to see something deliberate. If you try and get long here, okay, and you see something like that, you'll end up being tagged in, tagged out, and then this ends up becoming part of this. And that's just a bull flag to push lower. Whereas if we get a solid washout and then we come back in, that is likely a washout of liquidity. And then we're just looking for the consolidation afterwards. And then I would be able to manage this up to here for something in the region of 4.63. And then my target would be there, because if we measure this range, so the higher time frame liquidity point there, what a coincidence. Look at that. There's a sharp area of liquidity there, and it happens to be 90% of this range. So I would set the take profit there. Okay. And that would give us something in the region of 11.5% to work with. So even if this ends up being, let's get that off of the chart, even if this ends up being some kind of something like this, where we tap that, we get the near miss, it does something like that, and then this ends up being a bear flag to push lower, okay, you've still capitalized on a decent amount of profit there. So that is euro dollar. Now I'm going to move on to pound Aussie. So looking to get long on this at the minute. Previously, I was looking for shorts. I was actually, until this morning, looking for shorts because we were in this area, and I was looking for this to do this, tap into that by way of a reversal structure, because we had the sharp move there, which narrowly missed that. So there was a reason for price to come back, but it just sold off. Now, a lot of the time when these things sell off and they leave a gap, that's often an indication that we're going to return to them. So if we just zoom out, we do have to remember where we are. So we actually have potentially a failed reversal structure here. So we have the 1, 2, 3 into that area, okay? But this is not typically how price responds if this is going to be a reversal structure, okay? We don't typically do this, move up, consolidate above, and then move to the downside. What this is telling me is that it's disrespected this area. So if it's disrespected this area, this could actually just be an impulse correction continuation to push higher to fill this high, which this high near missed too. And does it have a reason to do that? Well, if we just zoom out, yes, because look how much of this move we've retraced. We've retraced about 80-90%. So we could be moving to the upside to take out this high, okay? Because price did not find enough liquidity at these highs to send it to the downside. So with that in mind, if we just zoom in a little bit, we have this low here, which was the start of all of this consolidation. So we have that. We're tapping into that now. If we just zoom down, what do we have? Same as on euro dollar, we have the gap to this high. There's a gap to this low. Okay, so this narrowly failed to retest that. This narrowly missed this. There's a reason for price to come back up. Also, we're tapping into a sharp area of liquidity where there was a big, bearing in mind this is a 4-hour chart, there was a big rally to the upside from that area last time around. So it's significant. The other reason it's significant is because we near missed to it, okay? Near missed to it again, implying there's liquidity there. Okay, so what I'm looking for in this instance is I am looking for, a significant move to the upside. So I've got an alert set just above here. I'm waiting for a significant impulse up. Let's just move that down slightly. Significant break above this area, followed by a continuation, 5 or 15 minute, and then I'll be able to manage it to this high for something in the region of 3.5%. To this high, we've got 4.2 or 4.2x, I should say. And then we've got what I'd be doing is I'd be targeting this high here because one, there was a lot of volume here. Okay, so price could pull back deeply, even if it's going to continue going to the upside. And also, it's halfway. We just measure this range. Okay, that is about halfway within this overall range, and halfway within a large range like that is typically where price pulls back deeply as well. So that would give us something in the region of what are we working with here? About 10% or 10.78% X. So we're just going to I'm going to let that do its thing. Okay, and of course that is, that's what I'm going to be looking for from that pair. And then last up is dollar CAD. Now, dollar CAD is last on my list. You might be thinking, if you watch my videos regularly, or if you trade the Falcon strategy, you might be thinking to yourself, well, surely this looks much better because you have the 1, 2, 3. This high taps above that, and this narrowly misses the area of value. And maybe coming up, surely that looks better than the other 3. Well, does it? Because you have to zoom out. On the higher time frames, we have a gap to this high. Okay, we've broken out of all of this, and to me, especially with all of this volume, let's try that again. All of this volume, it looks to me that this volume will give this the legs to push up to the upside to take out that high, which this high near missed too. However, so that's the longer term thesis. Okay, but so that's why I'm factoring in the higher time frame. So this is kind of counter trend in some respects. However, we do have it is still a daily high, okay, and we can see the structure. I do like that on the daily chart, the fact that we can see it on the daily chart. So that's why this is last on my list. Although the lower time frame entry looks better, you do have to remember the longer term direction. With euro dollar, we could be heading in the longer term direction in alignment with what I'm looking for, and the same is true with pound Aussie. However, this is kind of potentially a counter trend move down to this low. Okay, so what I'm looking for simply from this pair, bearing in mind I've got 2 minutes left of this video, is because I've just said that the longer term direction is to the upside. I'm not looking for a 5 minute. I'm not looking for a tap into this area and a 5 minute a push down and a 5 minute consolidation. I'm looking for slightly more weight because I'm factoring in that higher time frame direction that I was just speaking of. Okay, so what I'm going to be looking for is a tap into there, push down, 15-minute continuation, and then what we have here, we're actually on the 4 hour. Let's get on the 1 hour, and then if we just measure this range, what do you know? Look at that. There's a low there, which is 90% of this range. So I would set the take profit there, and I would trail my stop loss at the same time. Am I expecting this to shape up today? No, I've kind of got this on loosely, just because I didn't have too many other pairs on watch. I wouldn't be surprised if this just trickles its way up to there, because look how it's been moving. It's been moving in a corrective manner. So we may just trickle our way up there, and it may take a day or two if it does actually shape up. Okay, so that's what I'm going to be looking for. And then I'll be able to manage it down to this low there for something in the region of 3%. This more sharp area there, you've got 5-6% to work with, but I'm not anticipating price reversing from this area. Okay, that doesn't look like a strong enough base for price to reverse to, so my target would be, as I say, down to there. But we shall see. I hope you enjoyed this video, folks. I hope you enjoyed the recap on Kiwi Yen. As I say, that is my first win as a funded trader. Okay, so we got the 2.62 or 2.63 as it actually was, and I will see you again in the next video. I didn't make a video the last couple of days of last week just because one of those days, I think it was, I didn't have anything on watch. And a couple of days, or one of those days, I was actually running late, and I wanted to give this a bit more time and attention rather than trying to rush my way through it. But anyway, I hope you've enjoyed this video, folks. And I will see you again in the next one. Thanks for watching.